Going on, guys? It's your boy Tyler bringing you fundamental news on the 15th of March 2023. I don't know if you guys have heard, but the scandal about Silicon Valley Bank. Yeah, this is an article I found on Reuters after the scandal. The dollar was out tempting to steady in Asia on Wednesday as investors dialed back bets on US rate cuts and fear of a banking crisis ebbed. Though a looming hike in Europe had the euro on a firm footing, the European Central Bank meets on Thursday and markets think a 50 basis point hike is likely, a more hawkish stance than traders expect from the Federal Reserve next week. The euro dollar touched a month high at $1.0760 in the Asian session before drifting back to flat at $1.0744. Elsewhere, the last few days, selling pressure on the dollar was abating. The dollar rose 0.4% to 134.72 yens, even as wage talks delivered the biggest pay increases in a quarter century, which are likely to pressure monetary policy settings in Japan. Recent rallies in sterling, Scandinavian currencies, the Australian dollar, the New Zealand dollar also seem to lose steam, though without really giving back any ground. Banking stocks bounced, and bonds and interest rate futures have given back some of the huge gains they logged following the collapse of three US banks in a matter of days. When all the dust clears, I think we'll end up with a dollar not being quite as strong, and the flow of data will probably resume the center stage. As I said before, guys, there are two sides of the coin here. As the Fed comes to save these guys that made these bad investments into cryptocurrencies, such as your Silicon Valley banks, this is going to be bad for the dollar. But it's going to be good for the depositors, of course, because it means they get to keep their money. Right, as I was saying. When all the dust clears, I think we'll end up with the dollar not being quite as strong, and the flow of data will probably resume the center stage. I think we end up with a lower Fed peak than was priced a week ago, and all else equal, that should result in the US dollar being a bit weaker than where it was a week ago. Interest rate futures pricing now implies an 80% chance of a 25 basis point rate hike next week. That is a lot more dovish than a week ago when markets priced a similar chance of a 50 basis point hike, but it is also a lot more hawkish than a day ago when crisis fears had traders pricing a 50% chance of a hold and steep cut later in the year. US consumer prices also increased solidly in February, keeping the pressure on policymakers to contain inflation. Sterling GBP/USD up by about 1% for the week, steadied at $1.21.49. The New Zealand dollar and the DUSD dipped 0.4% to 62 cents and 10 cents. And the Aussie fell 1.5% for the week so far, was flat at 66.79. As investors caught their breath, together with steadier stock markets and relative calm in bonds, the moves suggest the intermediate fears of contagion in the US banking system have reduced following the failure of Silicon Valley Bank last week. The strong performance this week, however, for the safe haven Swiss, which is about more than 3% in 5 days, shows the elevated levels of concern in markets. Chinese economic activity indicators came in mixed in the Asian session, with retail strength extending but property investment falling. It gave a brief boost to the Australian dollar that soon faded. The yuan inched lower as well. There you have it, guys. The dollar is going to be weak because of everything that's going on in the banking system. These are only the beginning, guys. This is only the beginning of this financial crisis that is going to happen. You see, this crisis, it's like a cancer, and it's going to spread